You know, when you picture Japan in 2025, your mind probably jumps straight to like super high tech, right? Bullet trains, robots.
That sleek, efficient image.
Exactly. And sure, that's definitely part of it. But what's actually happening with their economy right now is, well, it's surprisingly
It
complicated.
really is. There's a lot going on beneath that surface.
Yeah, we're talking about their GDP taking a dip, the yen facing some real struggles, these big tariffs looming.
And all that on top of a major demographic shift that's been brewing for a long time.
It's such a contrast, isn't it? I mean, you think back, Japan was this absolute economic powerhouse for so long.
A real leader, yeah,
Yeah.
especially in Asia. That export-driven model was, well, the model for a while.
And seeing them navigate these choppier waters now, it just shows how fast things can change globally.
Absolutely. So our mission today in this deep dive is to sort of unpack these forces. What's really driving things in Japan's economy right now?
Right. We want to get beyond the headlines, understand the why. Why does this matter, even if, you're not directly dealing with yen or Japanese trade?
Exactly. Let's try and get some clarity.
Okay, so where do we start? Maybe the big picture. The overall size of the economy, that GDP dip you mentioned.
Sounds good. And a little bit of history helps here, I think. Just remembering, back in the 80s, Japan was the second largest economy in the world.
Second largest, that's huge.
Incredible, really. But then came the bubble bursting in the early 90s, and that led into what people call the lost decades.
Right, that long period of stagnation.
Yeah. And that context is important for understanding the latest figures from early 2025, which showed a bit of a worrying trend.
That was the 0.7% contraction, annualized, right. Can you just quickly explain what annualized means in this context?
Sure. It basically takes the growth rate from that specific quarter, in this case, a negative rate, a contraction, and projects what would happen if that same rate continued for a full year.
Okay, so it gives you a sense of the yearly impact if things stayed the same.
Exactly. It's a way to gauge the momentum. And this dip, this 0.7% annualized drop, was actually a bit bigger than many analysts were predicting.
So what caused it? What were the main factors?
Well, two big things stood out. First, private consumption, basically.
Yeah.
People spending money was pretty much flat, just didn't grow.
People holding back.
Seems like it. And second, their exports actually went down, while at the same time, imports went up.
Oh, okay. So less money coming in from selling stuff abroad and more money going out to buy foreign goods.
Precisely. That combination tends to pull down your overall GDP number.
And wasn't there some talk recently about India maybe overtaking Japan, becoming the fourth largest economy? What's the story there?
Yeah, that's a really interesting point, and it shows how fast narratives can shift. There were definitely reports suggesting India had already passed Japan in 2025.
Okay.
But if you look closely at the IMF, the International Monetary Fund, their projections, specifically for the fiscal year 2026, suggest India is likely to just edge past Japan then.
So not quite yet, but very, very close.
Extremely close. As of right now, Japan still holds that number 4 spot globally. But the gap is tiny. And India's growth trajectory is, well, very strong. It definitely signals a changing dynamic.
Okay, so Japan's still fourth, but feeling the heat, definitely. Let's pivot to the currency, the yen. Sounds like it's had a rough time.
Oh, rough time is putting it mildly.
Yeah.
2024 was really dramatic for the yen. It fell to levels against the U.S. dollar that we hadn't seen in, like, decades.
Decades. Wow, how low did it go?
It hit around 155 yen to the dollar at its lowest point. And the main reason, the biggest driver, really comes down to interest rates.
Right, the difference between Japan and the U.S.
Exactly. You had the U.S. Federal Reserve hiking rates pretty aggressively to fight inflation over there. Meanwhile, the Bank of Japan kept its rates incredibly low, even negative for a while.
So money flows to where it gets a better return.
Precisely. If you can earn more interest on your money in the U.S. than in Japan, investors are going to move their capital. That increases demand for dollars, decreases demand for yen, and boom, the yen weakens.
And even when the Bank of Japan did finally nudge its rates up a tiny bit in 2025, it didn't really seem to move the needle much for the yen, did it?
No, it didn't. That hike was quite small, really just bringing rates back towards zero. It wasn't nearly enough to close that big interest rate gap with the U.S.
So what does a weak yen actually mean for Japan's economy? Is it good, bad, a bit of both?
It's definitely a mixed bag. On one side, a weaker yen makes Japanese products cheaper for people in other countries to buy. So theoretically, that could help boost exports.
Okay, that sounds positive.
It can be. But the flip side is that it makes everything Japan imports much more expensive. Think energy, raw materials, even food and consumer goods.
Ah, so higher costs for businesses and consumers within Japan.
Exactly. It pushes up inflation domestically, squeezes company profits if they rely on imported components, and eats into people's purchasing power. It's a real double-edged sword.
Okay. And speaking of things making life difficult for Japanese companies, these potential U.S. tariffs, that sounds like another major headache.
It's a huge one.
Yeah.
The announcement came in April 2025. If no new trade deal is reached, the plan is for a 24% tariff on a whole range of Japanese goods.
24%, that's high.
It is. And even higher for cars, the specific 25% tariff just on automobiles, scheduled for July 2025.
Wow. And cars are so central to Japan's exports, aren't they?
Absolutely critical.
Yeah.
You think about Toyota, Honda, Mazda, Nissan. The auto sector is a cornerstone of their economy, so a 25% tariff is a very serious threat.
Have we heard from the car companies themselves? How worried are they?
We have. The signals are definitely ones of concern. Toyota, for instance, publicly mentioned they're preparing for potentially a 20% drop in their profits if these tariffs go through.
Yeah, a 20% profit hit, that's massive.
It really is. And
Yeah.
Mazda, they actually decided not to issue any earnings forecasts at all, which, suggests even greater uncertainty. It really shows the level of anxiety.
So it's not just theoretical worry, it's affecting planning right now.
Definitely. And it's not just the U.S. market causing concern. Export growth to China, which is Japan's #2 trading partner, has also slowed down quite a bit. Only 0.7% growth in the first quarter of 2025.
So headwinds from the U.S., headwinds from China. Feels like they're caught in a bit of a trade squeeze.
That's a good way to put it. And this is all happening while they're dealing with that huge demographic challenge we touched on earlier.
Right, the population issue. Can we dig into that a bit more? How severe is it?
It's arguably the most significant long-term structural challenge Japan faces. The population isn't just aging rapidly, it's actually shrinking. Fewer births, longer lifespans.
And that means fewer workers, right?
Exactly. A shrinking workforce puts a natural brake on economic growth potential. Fewer people to innovate, produce, consume. And at the same time, you have a growing proportion of elderly citizens.
Which means higher costs for things like healthcare and pensions.
Precisely. It puts immense strain on public finances. I remember reading an economist, Mamakazu, described it as a demographic tsunami.
A tsunami. That really paints a picture of the scale.
It does. Because it affects everything. It makes it much harder for Japan to handle its already very high public debt, around 250% of GDP, one of the highest in the world. Unlike countries that can sometimes rely on population growth to expand the economy and sort of grow out of debt, Japan faces the opposite pressure.
Wow, 250% of GDP. That's a lot.
Huh.
So with this demographic tsunami, are they just accepting it or are they trying to do things to counteract it?
Oh, they are definitely trying things. We're seeing moves, for example, to loosen immigration rules, to make it easier to bring in foreign workers.
Ah, okay. To fill some of those labor gaps.
Exactly. In various sectors, from tech to care work to services. It's a pragmatic response. But, Japan also has very strong cultural traditions regarding immigration.
Right. So changing that isn't necessarily quick or easy.
No. It's likely to be a gradual process, finding that balance between economic need and societal adaptation. It has its own complexities.
So many of these current issues, the slow growth, the debt, even some of the policy responses seem to trace back to that period people call the lost decades. Can you just recap what that was about?
Sure. The lost decades is the term for that long stretch of economic stagnation. After Japan's massive asset bubble stocks, real estate burst spectacularly in the early 1990s.
Right, the boom and then the bust.
Exactly. And what followed wasn't a quick recovery. It was years, decades really, of very, very low growth. And crucially, it was often marked by deflation.
Deflation, falling prices, that sounds like it could be good for consumers.
You'd think so initially. But persistent deflation is actually quite damaging. If everyone expects prices to be lower tomorrow, what do you do today?
You wait to buy things.
Exactly. Consumers postpone purchases. And businesses. They see falling prices and falling demand, so they hesitate to invest or hire. It creates this downward spiral that's really hard to break out of.
And Japan was stuck in that for a long
A
time.
very long time.
Yeah.
That things have shifted recently. We are seeing some inflation now.
Right. Inflation is back around 2% in 2025, you mentioned. So does that mean the lost decades are finally over?
Well, it's not quite that simple. Having some inflation is generally seen as healthier than deflation. But the key issue now is whether wages are keeping up.
Ah, okay. So prices are rising, but are people's paychecks rising enough to cover it?
That's the crucial question. And for a while, the answer was mostly no. Real wages, meaning wages adjusted for inflation, weren't really growing or were even falling. So even with prices going up, people didn't necessarily feel better off. Their purchasing power was still squeezed.
Which loops back to that weak consumer spending we talked about earlier.
Exactly. It limits how much households can spend, which holds back a big chunk of the economy.
So Japan's grappling with these internal legacies and facing this rising competition, particularly from India. That feels like a really significant shift in the global pecking order.
It absolutely is. India's economic growth has been incredibly rapid. Their projected GDP for 2025 is around $4.19 trillion, nipping at Japan's heels.
And their growth forecasts are much higher, right?
Yeah, the IMF is projecting growth over 6% for India in 2025-26. They have demographics on their side, too. A very large young workforce. It's a major global economic story.
But it's important to add context here, isn't it? Because even if the total GDP numbers are getting close,
The lived experience is very different. That's a crucial point. You have to look at GDP per capita, the average income per person.
and there, Japan is still way ahead.
Oh, significantly.
Yeah.
Japan's per capita income, the average standard of living, is much, much higher than India's. So while India's overall economy is booming and catching up in total size, the average Indian citizen's economic reality is quite different from the average Japanese citizen's.
Okay, that's vital context, but still, India's rise must feel like a bit of a wake-up call for Japan.
I think wake-up call is a good term. It underscores the need for Japan to really innovate, adapt, and find new sources of growth to maintain its standing and prosperity in a changing world.
It sounds like a tough spot overall, but are there any, glimmers of hope, any positive signs that Japan might be able to navigate this?
Yes, definitely. It's not all doom and gloom. Japan still has incredible strengths. Technology and innovation remain world-class.
Right, the robotics, the advanced manufacturing.
Exactly. And people like Yumiko Murakami at Empower Partners Fund argue that leaning into automation and digitization is actually a key way Japan can address the shrinking workforce challenge. Boost productivity even with fewer people.
Using tech to solve the demographic problem, in a way.
That's the idea. We've also seen some positive signs in the Japanese stock market lately. The Nikkei index has performed quite well, which suggests some investor optimism about structural reforms taking hold.
Okay, that's interesting. And what about wages? We said real wages were lagging, but is there any movement there?
Actually, yes. This is potentially a very significant positive development. In 2025, we're finally seeing nominal wage growth, the headline number, before inflation picking up, somewhere in the range of 2.5% to 3%.
And is that finally enough to beat inflation?
It seems to be, yes. For the first time in a while, wage growth is outpacing inflation. This suggests the labor market is genuinely tight. Companies are having to compete for workers and pay them more.
Which could, down the line, boost that consumer spending.
That's the hope. If people feel they have more money in their pockets after accounting for price rises, they might start spending more freely. That would be a huge boost for domestic demand.
Any other potential bright spots?
Well, on a slightly different note, Japan is hosting the World Expo in Osaka in 2025.
Ah, right. Expo 2025.
Yeah. Events like that can bring tangible economic benefits, tourism, investment, infrastructure spending. Plus, it's a chance to showcase Japanese innovation on a global stage.
Okay, so there are definitely some positives to point to, but those trade issues, especially the U.S. tariff threat, still feel like a big shadow hanging over things.
They absolutely do. It's a significant external shock, particularly, as we said, for that vital auto sector. Japan's trade negotiators might downplay the immediate impact on Q1 GDP.
Saying the dip wasn't directly because of tariff fears yet?
Right. But the potential damage, if those tariffs actually take effect in July, is undeniable. And this puts the Bank of Japan in a really tricky spot.
How so?
Well, on the one hand, there's probably some internal desire to continue normalizing monetary policy, maybe raise interest rates a bit further away from zero, especially with inflation back.
Okay.
But on the other hand, do you really want to hike rates which can slow the economy right when you're facing a major tariff shock and signs of slowing global demand like we see with China?
Yeah, that sounds like a terrible time to tap the brakes.
Exactly. Economist Takeshi Minami warned about this exact dilemma. It's a very delicate balancing act for the central bank. Add in the slowdown in China impacting exports, and the path forward looks quite constrained.
So, given all these complex, interconnected pieces, the domestic challenges, the global pressures, the potential bright spots, what does the path forward look like for Japan? What are the key things they need to focus on?
It really seems to demand a strategy on multiple fronts. First, doubling down on technology, automation, digitization that seems essential to combat the demographic drag and lift productivity.
Keep playing to their strengths.
Right. Second, they probably need to actively work on diversifying their export markets. Being less reliant on just the US and China would reduce their vulnerability to bilateral trade tensions or slowdowns in those specific huge economies.
Spread the risk a bit.
Exactly. Third, the government might need to consider more targeted stimulus measures to support domestic demand, help consumers, but they have to do that carefully, being mindful of that enormous national debt.
Right, that 250% figure looms large.
It does. And finally, there's the broader geopolitical picture. Japan needs to navigate these complex global trade dynamics skillfully, balancing relationships, maybe forging new partnerships. It's about economic policy, but also about diplomacy.
So wrapping this up then, it's clear that Japan's economy in 2025 is, well, it's a really intricate story. It's not the unstoppable giant of the 80s, but it's definitely not a simple narrative of decline either.
No, I think that's right. There's clear resilience there. There are active efforts to adapt. You see genuine bright spots like the potential turnaround in wages and the continued tech leadership, but they're happening alongside these very real, very significant challenges.
So for you listening, the key takeaway is that Japan's current situation is this blend of, historical factors like the lost decades, big global pressures like tariffs and competition, and these deep domestic issues like demographics.
But also, crucially, signs of potential recovery and ongoing adaptation, especially in areas like technology and maybe, just maybe, wages and consumption.
And looking ahead, maybe that World Expo in Osaka later this year will give us another clue. A chance to see how Japan presents itself, its innovation, its vision for navigating this complex future. It really feels like a story that's still unfolding.
It absolutely is. And it leaves us with that big question, doesn't it? Can Japan successfully leverage its undeniable strengths, its technology, its social cohesion, its experience to overcome these significant hurdles? In a world that's changing faster than ever, how will this economic giant continue to evolve? It's something we'll all be watching closely.